Good morning, traders. Sorry about the delay here. Thanks for joining. There's a little bit of a mic issue here. It is episode number 2451. Thanks for joining. Thanks for joining this morning. It's 8:02 a.m. Chicago time on Tuesday, the 18th of April, 2023. Again, this is episode number 2451. Derivatives trading is not suitable for all investors. Past performance is not indicative of future results. This morning, we are gapping up across the major indices in the U.S. We're leaning mixed to mild up. Overall, given the change in the rotations and the volatility, that scale is likely to change on here, so that today would show up as mild risk on. This morning we had some key earnings. Sorry, my brain is catching up with my mouth. We had some key earnings this morning. We had Lockheed Martin generating $15.126 billion in revenue on $6.43, beating on revenue and earnings. We had Goldman Sachs come in. They beat on earnings, but they missed on revenue. So their profitability is higher, revenue's lower. Bank of America beat on earnings, slight beat on revenue. Bank of America came in at 94 cents versus 82 cents expected. Bank of New York Mellon came in just a penny better at $1.13 on a very small revenue miss. And then Johnson & Johnson came in at $2.68 versus $2.51. That's a beat of about 7% on $24.746 billion. Remember, this is it's earnings season. It's really important. It's really important to pay attention to what these companies are doing. After the close today, we have United Airlines with about $11.4 billion in estimated revenue. We have Netflix expecting about $8.18 billion. Omnicom at $3.38 billion. Interactive Brokers at $1.08 billion in the last quarter. This is for Q1. Overall news, we had some numbers here just recently, but we did have some important releases in the overnight session and yesterday. The key being that yesterday we got China's GDP growth rate year on year for Q1 came in at 4.5, completely beating the 4% expected. The forecast was 3.8. The consensus was really 4%. It beat both. The prior growth rate in China was, the year on year was 2.9. So China reopening in full bloom here and is really pushing forward very, very strongly. GDP growth Q on Q is 2.2% in line with expectations, but much higher than the prior of 0.6. This is important. The unemployment rate out of Great Britain has ticked up to 3.8% from 3.7. Also, claimant count has ticked up against the prior 28.2 thousand versus negative 18.8 thousand the prior. So a big jump in claimants for jobs in for unemployment in Great Britain. The ZOO numbers, the other one came out at 5 a.m. this morning. The ZOO, it comes out of Germany. It's a sentiment index, and it was expected to be 15.3, came in at 4.1. This is not good. Germany, more pessimistic on growth. It's still not a negative number, but it's been falling. The prior is 13. This one's 4.1. It was expected to beat the prior, and it went the other way. Inflation rate out of Canada came out at 8.30, and that's a 4.3%. The prior is 5.2, so cooling off in Canada as well, as we saw in the U.S. 4.3 was what was expected, and then building permits out of the U.S. this morning came in with a small miss one thing that is definitely needed is inventory in the U.S. for the housing market to cool off some of these rental rates and home ownership rates. The number came out at 1.413 million for March. The consensus was 1.45. The prior is 1.55. So that was just a very slight miss. Housing starts 1.42 million versus 1.4 million expected. So pretty decent there. And then looking forward, Fed's Bowman is coming out at 1 o'clock with comments. And then we have the API crude oil stock change after the close today at 4:30. That's what's on deck. That's what's on the calendar. EY to cut 3,000 jobs in the U.S. after abandoning breakup plans. GSK to buy Bellis for $2 billion. Apple rolls out high-yield savings account with Goldman Sachs. Goldman Sachs has been working towards breaking into the consumer market, and I know that division has been losing money on multiple attempts. I think they launched a consumer banking sector department, and I know that that hasn't gone so well. Looking at the S&P multi-distribution profile this morning, we only have 161,000 contracts. This is part of the issue here that we're seeing, and I've commented on this several times, that in an attempt not to make excuses for the fact that I just don't see very good setups. It's a tough market. This is just a normal part of the process. We're in between regimes, market regimes, and as a result, we're in this kind of low volume, low volatility grind type of market. It's my least favorite, but it's just part of the process. The market is set up with the earnings expected to be pretty strong here. The market's set up really for more upside. This is why we've been talking about 4204 in the ES, which it looks like we're about to attack that. The ES got up to 41.98 and a quarter this morning. Inventory's 55% long, range is 26 and a quarter points, which is wider than what we had yesterday. The most important thing to note this morning is that we're in a gap versus the prior days. Gap rules apply today, and we're going to be keenly looking at whether or not we get responsive selling into the gap zone and into the prior range, or if we get early support in the S&P to push higher. So I'm going to show you this. This is from yesterday. Let me move myself over here. This is from yesterday, and remember we talked about the fact that we tested higher. For those of you who are here, we tested higher, and then got to almost 41.90, then broke down, but we still finished pretty strong. That's why I'm circling the close here. We still finished pretty strong, and it looked like it's likely to walk back up the thin volume part. It performed a pretty solid test to the downside. And again, as I pointed out, 4204. And then yesterday, if it does not hold the point of control from the prior session, then I'm expecting it to fall to the other side, get through the 4150, down into the 4100. Of course, if we give up the 4100, then we're looking at 4026 below, which is kind of a pipe dream. I don't know that the market's ready to do that. If I forward a little bit, again, I'm just looking at yesterday's video. You have access to this online. If I forward a little bit, I'm going to look at the NASDAQ, and I talked about the NASDAQ a fair amount yesterday, and I talked about the 13080. If you look at the NASDAQ yesterday, it got down to 76.75. And again, this comes from this composite right here, the 13080. We talked about the potential for pulling back, retesting for a push, for the push higher. And And that's basically what we're doing now. We went to, again, yesterday, 1307.76.75 and we're starting to push higher just as expected. We're working through what is a fairly Gaussian, very well balanced composite profile in the Nasdaq, with the key price being what's shown here, 13,080, which was tested nice and clean yesterday, and that's what we've got. Okay, so this is I wanted to go over the plans from yesterday. Let's take a look at the overall picture. We're going to cover several products. I'm going to speak very fast here. Yesterday, completely balanced, but we finished quite bullish. So yesterday, the expectation, the way we left yesterday, the morning trade was very choppy. It was very difficult. 3 losers in a row type of morning. And then it finally found a base, and it turned around, and it ended up breaking higher after fighting with 41.65 quite a bit, or 41.69 actually, 41.69 area, put in multiple highs there, expected that to break, and it finally broke. From the low, it rotated and pushed higher and covered the entire range. Basically, the closing move was the main move of the day. And we ended up finishing quite bullish yesterday. So the expectation, when we finish the day bullish, essentially what that says is the market in its target to facilitate balance. Market's job is to find balance, find the most efficient price in which the maximum volume can interact. That's the goal. Remember, from your economics basics in economics 101 class, or basics of economics, you have that supply demand curve, and then there's the optimum price. And the only reason it's an optimum price is because that's where the maximum number of trades are being facilitated. We call that the point of control, and we call that balance. And the market's job is to constantly look for that balance, right? And so when we run up, and let's look at this from yesterday. This is a better illustration of it. When we run up like this, pretty decent volume, look at that rotation, really big rotation from the low. When we run up like this and finish near highs, and then we run out of time because the RTH session finishes, generally the market is not done finding those sellers, and it's likely to continue to advertise prices higher. So we reopen, and what it does is exactly as expected. I wouldn't fade a market that's closing near highs or lows. I wouldn't, if it's closing near highs after a run up, especially on the close, I wouldn't sell that. If it's selling off pretty good on the close and finishing at the low, I wouldn't buy that. I wouldn't look at that as a bargain, because there hasn't been any evidence that buyers have been found. And so our job, unless you have really deep pockets and like to just take a lot of heat, our job is to see that the market has found buyers before stepping in. What most traders do is they're learning, or traders who are fighting the markets, they try to anticipate where it's going to turn, and that's just a losing game. It's just a losing game. You don't have to do that. Your goal is to see that it's found some sellers, like it kind of did here, but this is in the overnight session right before the open. So it has found these sellers, and then what we want to see, so here is an example of it, finding sellers. You see where the point of control has shifted to the top of the range, point of control being right there. It has shifted to the top of the range. Now we see, okay, there's a lot of selling interest, but this could be just a high flag that continues, whereas those sellers will fuel more buying or break higher. So given the trend and given what it did yesterday on the close, given that the open in the overnight sessions below us, the prior settlements below us, VWAPs below us, mid is below us, this isn't a short setup at all, okay? But if it starts to break lower, if we see that the rotations are starting to expand to the downside, would pour pushes up, then that starts to get our interest in the short side, especially if it starts to attack and want to clear the VWAP. Now we're looking for a gap to settle trade, and that's exactly what we're going to look for this morning. We're going to look to see, does it consolidate on the open and start to really have a hard time pushing up against the high here. This is the Russell. Pushing against, this is just an example of the same structure, whether it's Russell, Crude, Dow, DAX, Bitcoin, doesn't matter. It's the same structure. So it's pushing higher, and then we're looking for it to break down before we play to the short side. Otherwise, we're looking for a continuation, a gap and continuation. Here's the other gap in the S&P. I scan the markets before the open, and I end up looking at different things, and so I end up with different products on the screen. But really, for the purpose of this trader bite, it doesn't make a difference to me. I'd like to keep it consistent to the ES, but to me, these charts are all the same. They're all the same. All these products are the same. This is what I've been doing for a long time. I haven't changed the way I've traded since 2005 or so, and I've been trading for 23 years. So same with the S&P, consolidating. We could see that it has found the point of control. So what we did is we pushed up on the close. We've consolidated and continued to squeeze. We finally found, we have some evidence that we have found some sellers, and that's the market's job. The question is, do these sellers now feel motivated and start pushing, expanding rotations to the downside, or are they carefully or slowly pulling back so that you have a high flag for a continuation into the 4,200? We're pushed up against the 41.98 and a quarter. This is a key area here, as it is in the Russell in this area 1826. Same kind of area. We see the same in the Nasdaq. Same view, right? Pretty strong run, incomplete. The Nasdaq actually couldn't go neutral, which is not as great. Couldn't go neutral yesterday, pulled back, but then this morning it's been running up. And what has it done? Again, just like you saw in the Russell, we have it in the Dow as well. The point of control is at the high end of the range, and we are flagging here. And what we want to see on the open is, do sellers come in and liquidate and keep a lid on the buyers, or do they liquidate and the buyers see an opportunity to jump in, market on open orders, and we start to push higher? The Nasdaq pushing up against 13,300 this morning. We see a decent collision up there. So same process. The Nasdaq is actually relatively weaker, as I've been talking about for quite some time here, relatively weaker than the ES. Let's look at the relative delta. The ES, pretty good relative delta. Large lots participating, small lots, which is what we expect the most participation in the overnight session. But we do have the very large lots are participating on the buy side. We have large lots selling, which are offsetting some of the small lots. So the question is, because these are against each other, we expect a bit of a choppy open, and then we'll see money come in the form of large to very large lots early after the open. But we have pretty good separation from the full session VWAP, and we have a gap. For those of you confused by the gap, I'm always comparing the overnight action to the day action. When we look at the overnight action, I'm not looking at it against yesterday's full session. I'm looking at it against yesterday's day session. This may be where the confusion comes from. If a better view of this is this intraday chart. This is the RTH session. This is yesterday's auction right here. Relatively balanced-ish. It's a neutral extreme up close, which is quite bullish. As I said, I wouldn't fade this. But look at where we are. We're gapping. So if we open up here at 41.94, 93, we have and what's called an external gap, which is a gap zone. In other words, an area or a range that we have not checked since the last session. So this is important. So gap rules apply here, and then we have a gap to settle. So if we open down here, this would be an internal gap to prior settlement. If we open outside of range, it's an external gap or gap zone. So the expectation is we've skipped this area. The best structure for rallying is to test this area and see, is there any interest in selling? And if we don't close that gap and we start to run up, we have what is a weakish structure in the future. That gap becomes a very important area for the market to test, since we don't know what the participation is. And you might argue, but we do know because we traded it overnight. But the fact is, what did you trade overnight? The ES is built on the S&P 500, which weren't trading in their primary session overnight. So it's just moving in sympathy, or it's moving as a hedge, or it's moving for other reasons, but it's not being driven by the underlying stocks. This is why we look at RTH much more closely than we look at the overnight session, which starts at the close of the stock market cash session to the open of the stock market cash session the next day. It's, this is moving under the power of things other than the 500 stocks, 502 stocks that it actually represents. And so we look at this gap and we look at it and say, all right, gap rules, we're going to keep our hands off the mouse. We're going to see what it does in terms of treating last week's weekly high of 41.89. If it gives that up, then I'm and we have weak, it starts to rotate down. We have weak rotations to the upside. Then I'm looking for a short, and I'm going for a gap to settle trade. And that gap to settle trade is going to target the range high, the prior day's high, and the settlement. So that becomes one trade. The second trade is it opens, pulls back, chops around, goes to the other side, chops around, but it shows zero interest in selling. Every time it sells, bids come in, or there are icebergs on the bid and they're buying it up, and the expectation is that it's likely to continue higher. The caveat here this morning is the 4,200 century figure, but again, the target has been and remains, since we held the 4,100 down here. If you recall, if you've been here every day, since it held the 4,100, the target has always been 4,204. If it holds the 4,100, 4,204 is the next key area to test, and that's what I'm looking for today. We're very, very close to getting that done. I know it's a lot to cover, but it's really important for you to understand the background versus me just telling you, here's what it did. Remember yesterday, I talked about this as well, real quick. Go back to here. For crude, what did I say about crude? Here's what I said about crude. I thought I punched it in here. Maybe I just said it. I said that if it's not able to hold this 8170-ish area, then it's very likely to test the 8050 to get back into balance in crude. Look at what it did in crude as an example. And this is not to say, look at me, I got this right. This is to show you what was expected versus what actually happened. This is yesterday's RTH session. And look at where it went on the low. On the low, it went right to the target of 8050 that I talked about. If it's not able to hold the high from the prior box, and then the upper box starts falling into the lower box, then the point of control becomes very important. And that's what I'm showing you in this video here. If it's not able to hold the high of the upper box, then it's likely to come into balance into the point of control of the prior balance, and that's exactly what it did, almost to the tick yesterday. Crude, by the way, rolled to June this morning. You should be trading June crude. I'll leave you with that. It's a lot to cover. I know it's a lot to digest, but I really want you to understand this. If you want more detail, you want to ask questions or whatever, I'll invite you to go to convergenttrading.com and join for at least a month. Better to join for a quarter and do the Trade Right program and participate in the group mentoring sessions and so on, so that you can get your questions answered and you can be on a path that's sustainable, in my opinion. With that being said, I'm going to invite you to Thursday's public event. It is about charting the convergent way. We're going to go through top to bottom. How do we go from setting up context to moving to lower time frames to setting up a trade? And I'm going to walk right through this process and why we're looking at these things in some detail so that you can pick up some ideas and maybe incorporate them into whatever you're doing. Good luck.